All right, everybody. I am here with Casey Hamlin with NorthPoint Mortgage. I thought it'd be great, and it's the end of year 2020. Although by the time you watch this, it might be 2021 officially. But anyway, we're going to talk about 2020 and how crazy this year has been in the lending world. And then I'd like to get a feel from you, Casey, as far as what's happening with rates in the business right now, and then also what we're going to see in 2021, at least what we think we're going to see, as long as it doesn't get any crazier. But anyway, let's jump right in. Let's do this. So Casey, thanks for coming on, bud.
Oh, you're welcome. Thanks for having me.
Yeah, always good to see you. So this year's been nuts, hasn't it? I mean,
man, crazy.
2020. I mean, obviously I'm going to try to avoid talking about, the woes of COVID and how I, sat at my house in my pajamas for 2 months, and all that kind of stuff. But let's talk, solely about like the mortgage world, because interest rates went down this year. You guys were like slamming busy with that, with refinances and the whole 9 yards. What kind of like quick recap can you give on like what just kind of happened this year? What are some key points that happened that just kind of kept everything just cranking along?
Well, that's a great question. If you think about it like this, the rates were low before COVID hit.
Yeah.
Right. We were already in a low rate environment, and when COVID hit the United States, interest rates just plunged, and there was, you remember then that there was kind of a stock market dip as well.
Right. Yeah. Like in March in March.
Yeah. So all the markets markets were all kind of reacting at the same time, and mortgages. There was what we call flight to safety in investments, which mortgages are kind of viewed as an investment such as bonds, and they're generally safer for investors. And so when investors started pulling their money out of the stock market, they all rushed and bought, mortgage-backed securities or bonds, and it drove down interest rates. And so, so really, I mean, the story of 2020 in everybody's minds got to be, COVID and its impact on, not only just our personal lives, but also in the business world. Right.
Right.
So interest rates, took a plunge, and people started refinancing, and I mean, we're talking the lowest interest rates have ever been since they've been recorded. And we'll tell when we get gray and old, we'll tell our grandchildren that we had interest rates in the 2% range. I mean, it's literally that historic.
Yeah,
so
it's going to be kind of the opposite of like our folks. My parents thought, geez, I bought a house in the 80s and it was like 18% or 24 or something like that.
Yeah, exactly.
So we're gonna have the opposite conversation, right?
Exactly. Yeah. So so that was obviously a major thing, and it still is, and and then you kind of couple that with, it was a really strong seller's market, and buyers were in multiple offer situations, right?
Yeah. So
those low rates were what helped support that market, right?
Yeah.
Because I mean, it's it's about, for every $1,000 of an increase in price is about a $4 a month difference in payment for the buyer.
Right.
So
and with interest rates coming down, it still made sense for people to buy. So yeah.
And it made sense for them to take out loans in general. So even if they were, you're a savvy investor that has a ton of money, they might end up financing more of a house because they could at such a low rate versus take it out of the stock market. So it just encouraged borrowing in general.
Yeah. Well, especially in a state like Maine too, like the vacation land sort of thing, so to speak. I mean, people are coming up here buying second homes, things like that, just to, have roots in a state that had relatively low COVID numbers,
Right.
And of course that probably stemmed a lot of financing as well.
Right. And just the fact that Maine's so rural, in
Right.
nature, that they could, they could all, COVID also taught us that we could work remotely, and it taught employers that as well. And so, and that's why one of the reasons why we've seen such a nice spike in out of state buyers, right?
So true. It's funny. I'm working with a client right now that moved away a couple years ago for a job, and like now with all this, his employer went to him and said, "Hey, you can go back east if you want, because you can work from anywhere." So now he's moving back. It's kind of interesting, Yeah.
Yeah, I mean, we've talked to multiple buyers where this has kind of been like the catalyst that kind of said, okay, they either wanted to get to New England, and just needed that nudge, or they're in a place where it's more of an epicenter of the virus and they want to get out of there.
Yeah.
You have your older population that's more at risk, that want to buy second homes in Maine and move up till this thing's over.
Yeah.
So
Yeah, exactly.
So I mean, COVID is the story for 2020 as far as what has affected obviously all of us on a day-to-day basis, but also in the business world, had tremendous impact on interest rates and financing of homes in our market.
Right. Yeah, no, that's all great information as far as like what happened and what's going to continue to happen over the next, probably year or two. But the couple questions that I would have for you as far as what's happening now and like what we think is going to be happening in the future is, before we get into like what the rates are right now, what we think they're going to do this year, we've seen a lot of like protocols and procedures change because of COVID. Are you guys still doing, and do you think it'll continue as far as any extra steps that you're taking because of COVID? Like I remember you used to say when we first went into this, you said there's extra like employment verifications and things like that. Is that all still happening? And do you think that's going to continue on?
Yeah, the flip side of the impact of COVID has been in the lending world. We always did our due diligence, making sure that the applicant could afford their home, but they've taken it a step further even now. And not only do we do our due diligence, but we have to make sure that their business hasn't been too affected by the economic conditions that COVID presented, right?
Gotcha.
So for people in the hospitality industry, for people in the bartending and whatnot, servers and stuff, I mean, they have really scrutinized those incomes to make sure that we're not going to do loans for people that might find themselves out of a job here in 2 or 3 months.
Right.
And so, and that's been like from the top down, that has been just an industry norm.
Right. That's just what you're doing. Yeah.
Yeah. And it's not just us. I mean, as far as there's been local banks that I've talked to that said they've just tightened their belt about lending to landlords or people that are dependent upon rental income.
Yeah,
because
sure.
they're nervous about that.
Yeah.
So
that makes sense.
all the high risk financing has become a little bit more high risk or a little bit more expensive for the applicant because of perceived worry over the economy and how this stuff is all going to shake out.
Right.
So
now, do they? I'm just curious. Do they when you talk about like high risk? So like, do they choose certain industries that people are in that are flagged as high risk at this point, or?
Yeah, I mean, certainly if you're like I said, if you're in the hospitality industry versus an industry where you're
nursing or
not
something,
unaffected but less affected.
Right.
Yeah, they probably look at that application a little bit differently.
Yeah.
I mean, also you got to remember that in the hospitality business, if you're a waiter or a bartender, a lot of it's cash business,
right,
or a fluctuating income business.
Yeah.
So that in itself requires scrutiny, a little more scrutiny, or a little bit more.
I see. Right, right. It requires a little more look anyway.
Yeah.
So, you throw this on it. Yeah, makes sense.
Right. So you just kind of throw a pandemic on their ability to make money, and then it gets looked at a little bit more closely,
Yeah.
and so forth. So yeah, so the job certainly does impact things, I think.
Yeah, I bet. Okay. So then, interest rates. That's whenever anybody talks about mortgages, they're always like, "What's the rates? What's the rates?" All that stuff. What's roughly the current rate now, and when do you see them, ticking up? I mean, I hear a lot of people saying they're going to stay pretty low for a while, but what are you seeing in your
Well, I mean, obviously, I have to preface whatever I say with it's all situational and it's all measurement of risk, but interest rates on a 30-year fix have been between 2.6 to 2.8.
Isn't that something?
It's incredible. It really is. It's incredible. And so, the prediction for next year, when I've read, numerous trade magazines and whatnot, is, Freddie Mac, so they anticipate the originations or applications to decrease by about 25% next year. And I think that's because of the refinance. Everybody's, well, I should say everybody, but most people have tried to refinance that could.
Right.
There's still a select few out there, but there's majority of the business has been written. So
yeah, I gotcha.
I think they do predict that interest rates will go up to the low 3% range, which
still great.
Still great. And if it, remember now, when interest rates go up, that means the economy is doing better. Right.
Overall, the economy is doing better. So if they go up, it's not necessarily a bad thing.
Right. I mean, you think about it. Why did interest rates go down? Well, COVID hit and the economy was going down tubes real quick. Right. So it's kind of a good thing that if interest rates do go up a little bit, it means that we're coming out of this. Right.
Yeah.
So that would be a healthy thing in overall, you know. So, and you still, money at 3% is still dirt cheap. So,
right. I mean, it's funny, nobody really has a crystal ball on it, 100%, but it's like we were at one point not all that long ago where rates were starting to get close to 5%. What was it, like a year ago or something like that? Maybe a year and a half ago.
I would agree with that.
The market didn't pull back a whole lot there, I mean, I almost feel like interest rates would have to get up over 5% to start feeling some major pullback. I mean, what do you think?
Yeah, no, I agree. The same thing. I mean, again, if I think a lot determines is that I think a lot matters right now for 2021 about the vaccine, the success of the vaccine.
Yeah.
And how that plays into our day-to-day life. Right. I mean, if fears subside a little bit and people, we don't have to worry about, the certain parts of the economy shutting down or certain areas of the country shutting down, then I think that things will start to look pretty good.
Yeah.
You can start going again, and you have a new administration who brings in new agendas and whatnot that, that I think that this whole thing goes in the right direction. Interest rates go up a little bit is not a bad thing. I think that overall, we'll all be in a better place.
Yeah. Yeah, no, I agree with you. I think interest rates coming up and some things flattening out a little bit is probably good for the market and good for the industry. Yeah, for sure.
Yeah. I mean, think about the airline industry, right?
Yeah.
Where you think of they could use some good news with these vaccines, Yeah. And I mean, that would
a lot of industries that just need a little light at the end of the tunnel. That's for sure.
Right.
For sure. Well, hey man, that's all I had. That was easy, right?
Yeah, real easy.
Yeah. Hey man, I really appreciate you coming back on here and kind of chatting about it. 2020's been an interesting year for sure. I'm kind of excited to put it in the rearview mirror and keep going in 2021. And let's hope that everything just looks better. Yeah. So,
I'm sure it will. Everything looks like it's headed the right direction. So,
well, hey man, have a great holidays and have a great new year. And we'll see you soon, buddy. Stay safe.
thank you, Doug.
All
Have a
right.
wonderful holiday, buddy.
Yeah, you too. Thanks, man.
Really good. I'm very glad I took the